To the birds and bees, I want money.
It's time to talk money. Finance with Domoic Alafaci from Collins House. collinshouse.com. Dominic, good morning to you.
Good morning, Darren.
Have you got a market update to start things off for us?
Certainly do. Overnight, we saw the Dow Jones Industrial Average give back 45 points, or 0.12% to 39,119, whilst the S&P 500 dropped just under 0.5%, and the Nasdaq fell almost 0.75% as tech stocks unfortunately got a big hiding. Across Atlantic, London's FTSE was 26 points lower, with the French, German and Italian bourses mixed. Gold put on $3 to $2,339.60 US an ounce, whilst West Texas Intermediate and Brent crude were basically steady at about $81 and $86 a barrel respectively. And the Aussie dollar is currently buying 66.7 US cents, with the ASX 200 SPY down 35 points, showing that we're going to have a negative start to the trading week on Monday, following last night's effort where our market put on almost 8 points to end the week at 7,767.
Okay. Hey, Dominic, we were talking about retirement earlier. What's the current figure if you're sort of an average dude? How much do we need to retire?
Look, it's really a function of how much you spend each month. If you need about $5,000 in your pocket net of tax, that's about $60,000. You'll probably need close to around $800,000 or $900,000. But unfortunately, $60,000 isn't cutting it anymore. A lot of people are needing, $8,000 or even $10,000 a month because of the cost of living crisis that we're in. So you probably really need about 1.2 million or a bit more to retire comfortably. Then again, if you're a couple, it could be a little bit less onerous because you can save on, one house, one car, one holiday, or perhaps 2 seats on the plane. But you can save money by if you're a couple, generally it's not double the single rate is what I'm trying to say.
Yeah, I'm with you. Interesting.
Dominic, the AFR is running a story today saying leading economists, so how am I travelling, say entrenched inflation has a 50% chance of triggering a recession by forcing the RBA to raise rates further. What's your take on this discussion?
We're a basket. Australia is a basket case at the moment. I think the best article I read was in, the Fin Review yesterday by Robert Gottlieb, and he's saying there's two economies in Australia: Victoria in the doldrums and the rest of Australia. So, we are just going backwards at a great rate in Victoria. We had the extra spending, we had the incompetence of governments cancelling contracts and on again, off again, paying people out, and, the biggest lockdown in the Western world. So we're behind the eight ball. We will recover. It's not the end of the world for Victoria, but we are probably 2 or 3 years behind the rest of the states, and Queensland and New South Wales are in far better shape than Victoria. So it's a sad case, and there will probably be an interest rate rise, and there may be a technical recession. I think we're in recession in Victoria anyway, but we as an overall country, we might just survive the technical recession, but we really are in a bad way.
Yeah. Speaking of that, the under stubby lids, tops, what I call bottle tops, there's often a question, a sporting question or a general knowledge question. Brad Hardy sent me one, and the question is, Dominic, in 2020, who started making Victoria bitter? And the answer is Daniel Andrews.
Well, I won't go there, but I was listening to Emily earlier talking about the Biden-Trump debate, and my topic today was elder abuse, and I felt a little bit that the Democrats are really abusing poor Joe Biden. He shouldn't be in the job, and it was only, I think, last week that Karine Jean-Pierre, the Democrat spokesperson, said that the videos of Biden stumbling were deep fakes and they were produced by Trump. Well, I reckon that's the biggest lie by a Democrat president since the famous Clinton, I did not have sexual relations with that woman, Monica Lewinsky. So
Monica.
It's a sad case, and I know a lot of people don't like Donald Trump, and he's portrayed as a complete creep in the media. But I think he's just a rude man who stands up to his opponents rather than worrying if they're feeling okay. So I think we need more people like that to stand up to Putin, Kim Jong-un, Xi Jinping, and the unmentionable militant Islamic leaders that are, hurting the whole world rather than bending over and showing our undies. So I think we're going to get what we vote for, but I just hope the Democrats put up a better leader, because that was embarrassing. And getting on to the main topic, which is elder abuse, I see a lot of people who are in retirement and some of their children or other people are taking advantage of them. And I had one not that long ago where a son of a Southern European family was basically, the father was a widow, was basically sort of ordering his father what to do with the will. And he had two sisters, and both myself and the lawyer who were in the meeting felt very uncomfortable with this fellow basically pushing his dad around. And thank goodness we didn't have to ring the elder abuse hotline and dob this guy in. We sort of got him to say, we've got him to at least admit that his sisters have equal rights to him, and assuming his father wants them to get some of the inheritance. So it's a very, very important issue, and it needs to be handled delicately.
Fair call. Speaking of calls, 133693 if you'd like to ask Dominic a question. There are a couple of calls coming through already at 10 to 10. Domoic Alafaci is here from Collins House, and Jeff joins us. Good morning.
Yeah, good morning. Hi, Dominic. I'd like your view on the valuation given to Guzman y Gomez, which issued recently.
Yeah, it was a surprise. It had a remarkable bounce and came off a bit. But look, these sorts of IPOs, it's one of the biggest ones I've had forever, have got a history of disappointing. This one hasn't disappointed. So until such time as the market finds a flaw with it, it may actually be a goer, Jeff. I'm not an expert, and I've seen some broker research that says it's a buy. But I'd be cautious because it's a one-hit wonder, if that makes sense. It's got one line of business, and the markets can be quite, fast food restaurant chains can be...
Yeah, that's the restaurant chain, isn't it, with the yellow sign and two blokes on it?
Yeah,
Mexican Tucker.
Mexican, yeah.
Have you ever tried it?
No.
I have.
I'm not a Mexican food fan. It would be my least favourite food, I reckon.
It's good.
Is it?
Yeah.
Did you like it, Emily?
Yeah, I did. I think it's affordable. It's pretty fresh. It's fast. It's an alternative to the hamburger chains, and I think it's become very popular on the back of just getting it right at a decent price point, probably.
Yeah. Okay.
Yeah.
Thanks, Jeff. To Peter. Good morning.
Good day, Darren, Dominic. I've just got a question about superannuation. I've got a self-managed superannuation fund that I set up myself, just with a property in it. My question is, am I able to move another property from my own name into that self-managed super fund?
It depends. So I didn't catch your first name.
It's Peter.
Peter?
Sorry, Peter. Peter, it depends. If the property is a business real property, like it's a milk bar, a garage, if it's one of those, then you can transfer it in. If it's not, if it's a house, let's say that you're renting out, or a unit, then you can't transfer it in. So unfortunately, the ATO thinks it's a bad idea. I can't understand the logic, but so you cannot transfer an asset that you own other than business real property into a self-managed super fund.
Right.
Sorry about that.
Thank you very much.
Good on you. Thanks, Peter.
The funny thing is, Peter, if you sold it and bought the one next door, you'd be fine.
You'd be fine. Okay. To Paul, good morning.
Yeah, good morning, Tom. Thanks for taking the call. I've just got a quick question. I'm currently about to start a development. I'm about $1.5 million in debt. Now, with the economy where it's at, would you say it's a good time to start? It's a hard question. If not, who would I best be able to speak to in relation to figuring out my numbers, or if this is the right move for me? It's
Paul,
quite daunting at the moment.
I think I heard your name was Paul.
Paul,
I apologise if it's Great. Look, Paul, this is probably in Victoria the most difficult time to do a development. It used to be the 80-20 rule when I would see people, 80% of the people who would be first-time developers, they would do well, whether they do a dual occupancy or they buy something to knock it down and, build some units or apartments or something. 80% of the time they'd get it done well, and 20% of the time they'd, in our terms, we'd say blow themselves up, lose money. At the moment, it's the other way around. I think it's 20-80. It's very, very difficult for people to make money. The costs of building in Victoria and our productivity is so low that it takes us twice as long as 4 times as much. It sounds ridiculous, but it's the fact. The actual building costs are so high. A lot of developers are just sitting on their hands at the moment. So if you want to get someone to do the numbers for you, it's not to say you can't be in the 20%. Leave your details off air and I'll get Michael Maisie from Collins House Accountants to crunch some numbers for you to see if it's a doable project.
What sort of development are you thinking of doing, Paul?
So I'll be knocking down my current home and building three units. But as I said, it's quite a bit of debt, and look, I'm willing to have a crack, but at the same time, it's quite daunting. So
Yeah.
Three units I'm planning on doing, and I guess the long-term goal is to get some renters in there and get some good tax benefits as well. But, I mean, if I do the numbers today, the profit is quite minimised because there's quite a number of fees you need to be paying, which is to be factored into development, to councils and whatnot, and it's hard, it's very hard.
Yeah. Would you live in one yourself and rent the other two?
Yeah, correct. I potentially move into the second one at some stage to sort of try and minimise the tax if I was to sell. But yeah, that's the plan. But I'm currently got a property which I'd have to knock down, which I've got a mortgage on. So you're looking at about $2 million debt by the end of it all, which is, it's a bit daunting. But
Paul, do you have any superannuation? Do you have a super fund, Paul?
I do. Yeah, I do. I've got about 85,000, so it's not.
Yeah, okay, that's not going to help much. From the sound of things, Paul, it looks like it's going to be quite a difficult task. But it doesn't mean, look, sometimes, depending on the area you're in and the expected resale value of the newer apartments that you're building, it could be in the 20%. But, as I said, leave your details there, and I'll get someone to talk to you to see if it's viable.
Hold there, Paul, and we'll get all the information needed. That brings to a conclusion another session with our friend Domoic Alafaci, Collingwood supporter. We're playing the Suns today, Dominic. We'll be sitting back on the couch watching that. Not you and I together, but won't we? Nothing wrong with that either.
Say on air, now, I'm going to make an on-air promise. We've got to go to lunch before Mark returns.
Yes.
All of us, okay?
Oh, good idea.
That's on me. So we've got to, please hold me to it, guys.
All right.
Thanks, Tom.